from the line of Ankur Mishra from ET Now Swadesh. Please go ahead.
Hi, sir. I just wanted to get a sense regarding your margins as well. You have posted around 4.34% this quarter. With the Reserve Bank of India clearly signaling, taking the front loading last time, how are you placed in terms of margin in this fiscal later on in coming quarters?
No. I mean, it's difficult to call out what happens during the rest of the year. But broadly, I mean, our NII grew by about 10% during the quarter, and the NII margin, as you said, was about 4.34% in the current quarter compared to 4.41 in the previous quarter, and about 4.36 in Q1 2020. Of the previous year. Of course, I mean, the movement in the net interest income from Q4 to Q1 was primarily due to repricing of loans linked to external benchmarks, which was according to actions which RBI has taken. Some interest reversals on account of NPA seasonal additions in Kisan credit cards, which normally happens in the first and third quarter, and offset by reduction in deposit rates both on the savings and domestic, from savings and term deposits. We do expect the NIMs to sort of compress a little more in the next quarter. After that, we will see how it goes. It depends on RBI's actions, overall liquidity, and if you know from a long-term perspective, NIM was around that 4% before the commencement of the rate hike cycle, which happened in FY22. And then they moved all the way up to 4.5, and before they are declining to the current levels of 4.3. So from our perspective, NIM is one of the levers that we have, and we will continue to focus on maximizing risk-calibrated profit by using various levers. And of course, NIM is one of the levers that we talk about.
All right. Also, I just wanted to understand regarding your home loan growth particularly, do you think this is more scalable in the coming quarters, or you think this kind of momentum will continue?
No, it's difficult to talk about, momentum in the future. Our focus is, wherever the cash flow is happening within the larger economy, we would like to maximize our opportunities by giving seamless delivery to our customers. We will try to look at all cash flows, and in mortgages, we have grown by about 10%. I think this is the place I think we called out that we would like to specifically focus on. And it's a secure book, it's a long-term book, and from delivering a 360 relationships to a customer, it is an important part of our portfolio, and we will remain focused on this.
Thank you so much.
Thank you.
Just explained about the pressure in the rural side, which was slightly marginal, but there was some shortfall in some small and marginal farmers and weaker section PSL, which the company was planning to address. Have they been addressed, and is that one of the reasons because of which your rural overall portfolio is down by around 0.4%?
No, when we look at customers, I mean, that's a separate this thing. I mean, because we have got various segments which you have to meet the PSL requirement, and one of them is the small and marginal farmers. And we try to, whatever meets our credit thresholds, we are happy to lend. I mean, so that is essentially what we look at. I think it's the first and most important thing is to ensure that the credit thresholds are irrespective of segment. So I would like to just make a distinction between that approach. And rural, there has been a bit of a slowdown, which includes, I think, tightening of norms from on the jewel loans also.
Okay. So just wanted to understand your views on the overall deposit growth, because there was a time when your bank used to grow the deposit by around more than 15%. It was in the higher double-digit level growth that the company was delivering. But we understand that it's a sector-specific issue. But that growth has come down to now around 12%, 13%. Given that we are in a rate cut cycle, how do you see the deposit rates going ahead? And also just wanted to add one more thing. What will be the strategy to grow the overall deposit growth? Will it be branch expansion, or will it be some other strategy which ICICI Bank will look at?
No, I think you have to see our deposit and loan growth in tandem and in line with what is happening across the banking system. So, as you are aware, both the credit growth and the deposit growth have slowed down. So, within that framework, you have to see our results in that context. And I think we have been happy to grow slightly better than the system, and our focus is on both ensuring that we have good quality customers and we are able to serve them on a 360-degree basis, which also brings me to the point that you talked about. How do we look at deposit growth? I think you cannot look at deposit growth in isolation. You have to look at it from a 360-degree angle. You have to serve the customer across his business needs, whether it is a home loan, whether it's credit card, PL, look at the payment transactions, and of course meet his business banking needs as well. So as long as we are doing the entire 360, the deposit growth will happen, and within that, I don't think so we focus specifically on CASA or deposit. We really want to focus on the customer, and as part of that, I think the liability growth does happen, and that's been a consistent strategy that we have been doing. I think we have been doing a decent job over here, and can we do a little better on those sides? The answer is yes.
Okay, great, sir. So one last.
Just wanted to understand, because you said that going ahead the net interest margin would decline further a little. So just wanted to understand, out of the 100 basis point rate cut that has been done, how much has been passed on till now, how much more will be passed on in the second quarter of FY26, and how have been the movement of overall cost of funds for the bank?
No, the rate cut happens by whatever is linked to repo happens immediately. I mean, there has been a 100 basis rate point cut, and it is immediately means over a beginning of a quarter, and over about a quarter times it just this thing. The deposit repricing happens over a little more longer period of time. In terms of the cost of funds, in the cost of deposits, our average cost of deposits in the Q4 2025 was about 5%, and which has come down to about 4.85% in the current quarter. Similarly, on the yield side, our yield on advances were about 9.86 in the previous quarter, which came down to 9.53% in the current quarter. So, go ahead. Yes.
Go ahead.
Yes, in comparison to the current quarter, the impact of transmission of repo rate cuts on external benchmarks linked to loans is expected to be higher in the next quarter, and I think that's just a function of the cycle.
Thank you, sir.
Set off by savings rate reduction and gradual repricing of term deposits.
Okay. Thank you, sir. Thank you for speaking to you.